Today, or this week, we had another inflation week, another CPI week. And this has been kind of a persistent trend that we've been calling for. Tavi's been particularly, calling for it, and that is this second wave of inflation. And what's the Fed been calling for? Instead, the Fed has been saying that they expect inflation to decelerate down to their 2% target. In fact, they started the year with tipping their hand that they were thinking about 6 rate cuts before the year would be over. I think that's dwindled down to something like 2 now, because it's much like when they were telling us that inflation would be transitory. It's like they were wrong, and they're wrong, and now they're being proven wrong again, because inflation is not coming down towards the Fed's 2% target. It's going back the other way. It's going up. And this is super core inflation, super core CPI. It's something that the Fed looks at, and it's really the services less energy, rent, and it's the services less the energy and real estate components of the CPI. And on a year-over-year basis, it's up over 5%, and on a 3-month annualized basis, it was up over 8%. With the latest CPI report this week. So the inflation data is doing anything but coming down towards the Fed's 2% target. And it's no surprise that gold and silver have been breaking out, and gold stocks are starting to move up as well. And it's very exciting to see. Let's go on to the next. So here's silver. Silver's had a nice run recently, but nothing like cocoa. I mean, cocoa has been on fire over the last year, and this chart was going around Bloomberg today, and I thought it was pretty interesting because it shows that long-term chart on silver juxtaposed right with cocoa, and it shows that Hunt Brothers cornering of the silver market back in 1980, move in silver, and look where we are today. This is re-indexed to 100 as of 20. Well, it's indexed to 100 as of 2024. That's why the prices don't look exactly like the $50 level that we hit for silver in 1980 and again in the early 2000s. But silver, just to get back to its prior highs of $50 an ounce, I mean, there's still a long ways to go to the upside. And it's just showing you, like Tavi has talked about, in a commodity bull market, the rotation, tends to go from one commodity to the next. In an inflationary market, it's the same thing. Look at, what the potential is here. Let's go on to the next.
That's a great chart, Captain, by the way. Good stuff.
So I'm going to thank you, Todd. I'm going to talk a little bit about our investment strategies here at Crescat today. We have 3 hedge funds at Crescat. We have a global macro fund, a long short equity fund, and a precious metals fund. Now, just this Venn diagram over here on the right side here tries to show kind of the relationship among these different funds, because there is a lot of overlap. And really at the center of all that overlap is what today is our long resource equity positions. So our precious metals fund is an activist metals fund. We have 2 buckets in there, really, our gold bucket and our electrification metals bucket that includes silver, copper, nickel, and other base metals. And it's an activist strategy. I'm not going to go too in depth into it right now. Let's just talk about the big picture at Crescat. And then we have the long short fund, which is our long short equity fund. A lot of what we do at Crescat is equity focused. And we it's something that I've had an equity bias and bent now for 30 plus years. I've got an equity fundamental quant model that I originally developed 30 years ago, and we've been continuing to use it and refine it ever since to manage money. But we're also macro. So we have a global macro fund It's really the long, it really encompasses the long short equity fund. Plus, it has the other macro exposures in other securities besides equities, like fixed income securities and commodity futures, that aren't necessary, and currencies even that aren't necessarily expressed in the long short equity fund. So global macro fund has everything. Our investment process at Crescat is very much macro focused as well as value focused. That's important to understand in our DNA about who we are. But we like to express a lot of our themes through equity. So you're going to see a heavy equity bent across all of our strategies. The Global Macro Fund has long and short exposures, as does the Long Short Fund. The Precious Metals Fund is really our long only focus fund today. It can go short if it wants to, but today it's a long only focused fund, and we are long precious metals, mostly through precious metals mining stocks, and heavily tilted towards the exploration side of that, which is the small cap and even some micro cap exposures that we have there, because that's where we believe the biggest value opportunity is to capitalize on this macro environment of rising inflation and depressed valuations. Let's go on to the next. So what we're going to look at here is the exposures that we have. This was as of the end of last month in our global macro fund, because it really shows, the different themes that we have. And there's 8 different themes that we have across the firm. The global macro fund is the one that can express all of the themes. And so let's just walk through this a bit. We have our mega cap growth ceiling theme, and that is our short positions in large cap growth stocks, mostly technology stocks that score poorly in our equity fundamental quant model. And we have this exposure is mostly through put options. We also have an SPY put option, so an S&P 500 put as well, because we believe we not only do have the catalyst for a market move to the downside with rising inflation and high interest rates and the inverted yield curves, but we also, and the excessive valuations, already mentioned that, but we also have we have both the catalyst and we have both the valuation setup and the and the positioning setup, the crowded positioning. So mispriced cost of capital, that's our other general equity bucket, where we have short positions in a variety of other stocks that are supported by our equity fundamental model. Brazil liftoff is a long commodity theme with Brazilian stocks. Genomic revolution, that's our biotech theme, where we've got Lars Tile helping us to pick stocks there. He's an industry expert. Our energy shortage theme, we've got some long exposure there, mostly through large and mid cap oil and gas stocks. And Lisa Theme is our industry veteran there, who's helping us with that theme. Our global fiat debasement and electrification metals, that's our activist metals exposure. And it's also its own fund in the precious metals fund, just those 2 themes. Those themes are across all 3 of our funds. It is our largest exposure across the firm today, because it's both a macro and a value exposure that we have high conviction around. And so that is why we, every Friday here, we talk about our activist metals positions and our theme. But you can see the exposures here. This is relative to NAV in our global macro fund. So the fund does employ a modest amount of leverage, but we have a heavy short position to offset our long positions. And we also have a yield curve steepener trade. This is our short 30-year treasury bond position that's duration matched with a long 2-year note position. And And it looks like a large exposure because most of that exposure is coming from the 2-year note side, which is, very short duration treasury securities, not super high risk. But what we're playing is the steepening of the yield curve. We've been in a record long inverted yield curve period of time. Normally, that's a signal of an oncoming recession. We believe this one's going to prove to be a stagflationary recession, and therefore we have this general great rotation trade where we're short mega cap growth, overvalued mega cap growth stocks. We're long commodity related equities. But when you go into a recession, what happens? That's when the yield curve re-steepens because the Fed is forced to capitulate and start to lower interest rates. But in this case, we have, we also are still in this inflationary regime. And we think there's a lot of risk still on the long end of the yield curve. And so, lo and behold, we haven't seen the recession yet. We haven't seen the uninversion, the steepening of the yield curve. We think it's directly ahead of us, and rising inflation and the lack of the ability of the Fed to cut rates on the short end is, we think, one of the key drivers here. So